Let's begin about your overall findings. Just how healthy is the franchise sector over your 2-year study?
Well, I think if we look at the economy as a whole, one looked at a backdrop of job losses, much less, very slow down growth, negative growth, I think, in some of the quarters. And in fact, the franchise sector was admirably robust. There certainly was a cleanup, and we saw a number of franchisors stopping franchising. About 67% of those decided not to continue on a franchise basis. But we saw an equally high number of franchisors coming into the market, and it's critical to see how many franchise systems there are, because those are the businesses that then create more businesses in terms of franchising.
Define those systems for us before we dig into the findings.
Well, it's a great question, because many people misunderstand what franchising is. But technically, it's a license arrangement between a franchisor who's developed a brand and an entire business model of how to run a business and operate a business. And then he or she or it grants the franchise to an independent owner operator to replicate that model under the brand name. And so that would constitute a franchise system. We don't have legislation in South Africa, so the definition is not widely understood. But
sure.
I think the commonality is if each business unit has a brand name that is the same, and it's owned by an independent owner or partly owned. It could be a joint venture, it qualifies as being a franchise.
Yeah, so let's look at the findings and what you found in terms of those businesses that thrived under this environment, because we're talking the 2-year study, and that 2-year study covers the period when the economy was actually in recession. Who thrived?
Well, on an overall basis, we track the contribution to GDP by looking at the number of businesses as well as the turnover that they're generating. And we saw between March 2009 to February 2010, compared to the period ending February 2008, we saw a 12% growth in turnover. So that's kind of at current prices. And in essence, that it grew, the franchise sector and its businesses grew faster, much faster than GDP did.
Agreed.
And I think there are very clear reasons why that is the case. Number one, consumers were very hard pressed in terms of their disposable income, and very, very thoughtful about where they spent their money. I mean, spending didn't stop. In many cases, it was redirected.
I think that applies to all of us.
Absolutely, yeah. But I think I'm going to spend my money at a brand name that I've had an experience at before. I've been happy with that experience, as opposed to going to an independent that I don't know the consistency of delivery. And so many of those trusted brand names sit within the franchise space and saw the disposable income coming their way. There were, of course, sectors business categories that contracted, for example, real estate and financial services. But in terms of turnover on a whole, we saw growth.
And where did that growth come from? Which sectors saw growth?
Well, interestingly enough, you're an economist, they say the lipstick effect in a recessionary environment. Health, beauty and body culture saw great growth. Service industries, business to business services saw lovely growth, and the quick service restaurant industry also saw above average growth compared to the other business categories.
And in addition to that, I see also one of the more interesting sectors was education and training in a recession.
Very interesting. In fact, we saw a large introduction of franchises that offer extracurricular education to scholars. And I think that's also, it makes sense, in terms of parents, again with disposable income, wanting the best for their children. We've seen a lot of negativity coming out of the education sector, literacy levels, and parents want their children to be well educated. If they're not getting it in the schooling environment, parents are supporting extracurricular.
I was going to pose the question, Andrew, as to whether that's probably also because of all the bad headlines that we've had about the education system, that there are these questions beginning to be asked about the appropriateness and the quality of that education.
Certainly, and I think it extends in the South African context beyond just education, as you see almost the trend of a lot of households privatizing services which are offered through one's taxes. So whether it's security, whether it's education, whether it's healthcare, as you see a lot of that. And as Bendeta says, is taking the bull by the horns and sorting it out themselves, as opposed to just relying on a system that apparently isn't working.
Yeah, one of the sectors that also did well was building, office and home. What does that comprise?
Well,
I'm thinking here maybe people sitting in their homes and also opening that extra bedroom and making an office and operating out of there.
As opposed to buying a new home, absolutely. It comprises a number of different type of businesses, from timber supply, lumber, building supplies, to providing services, flooring solutions, decor solutions, building. We saw actually a big contraction in the small building side. But very interesting in that category is the move to green. And we're seeing solar energy type of products and services coming into the market, water purification, and I think it's an area that we categorize as building, office and home. We're seeing a lot more players going to come into that market.
Yeah, let's talk about some of the sectors where we saw difficulties. And now you note here that 67% of these represented some 985 businesses that decided that franchising wasn't for them. Would there be any specific general reasons why this group, the franchise system, didn't work for them?
Yeah. There most definitely are reasons, and I call it a very responsible cleanup, because these franchisors, on average, they had about 10 outlets within each of the brands. And for it really to be viable as a franchise operation, you have to get to, and obviously depending on the level of turnover and the margins in the business, around 30, 40 outlets. So with a depressed economy and business confidence low, these franchisors decided that they shouldn't continue franchising.
Right.
And the vast majority was still in business over the period of the survey, but decided that they would either buy back their franchisees, or their franchisees could continue to trade under the brand name, but they wouldn't actively expand the business.
Right.
But many, if they did continue to trade under the brand name or as independent operators under their own brand names, the franchisors are still supplying product.
Yeah.
So it's, I call it responsible business practice.
But to what extent could we read in this an impact of competition as companies cut back and as consumer spending slowed?
I think that it certainly could have been an impact in terms of competition, but I also think there are two other factors that come into play. Franchise is about entrepreneurs and personalities, and when people get into franchising, I don't think they always fully appreciate their responsibilities to franchisees. So a company would start expanding on a franchise basis and suddenly realize he has an owner-operator that might have invested R1 million, and I've got to make sure that they are able to survive. That responsibility is enormous.
Absolutely.
And so when they come to terms with that, they suddenly do not want to undertake that responsibility to more people.
Yeah.
So that's one reason. And then I must say we found older franchise systems that have been tinkering with franchising, and there's no room if you're not going to be aggressive in a highly competitive market. And so the older systems decided, you know what, we're not going to continue.
I want to zero in on some of the sectors that you mentioned where there were pronounced closures. Yes, so we're talking real estate, petroleum, retail, entertainment, leisure and retail categories.
Well, in real estate, it goes without saying. I mean, we know that volumes decreased.
And prices came under pressure, margins under pressure, competition increased.
Yeah. And there was a ripple effect from that, because there was a contraction in real estate operators in terms of the number of franchises that closed down or stopped operating, as opposed to the principals, the franchisor. But the ripple effect came in terms of financial services, bond origination. Suddenly, that huge pressure in that particular market.
Yeah.
So
And do you see, is this a sector that where you see growth, particularly given the environment that we're now in, where we're seeing a tentative recovery, which remains very, very fragile?
You're talking specifically real estate?
Franchising.
Franchising. I think the important thing that comes out of it, and if you look at entrepreneurialism in general, is that one of the biggest failures in South Africa is the lack of skills transfer. You find finance for small entrepreneurial ventures, and then they don't succeed because they don't have the skills to succeed. And I think one thing that franchising gets right when it's done correctly is the transfer of skills. And as Bendeta says, is not to just take the money of the franchisee and leave them to their own devices, is there is that responsibility. And if done correctly, it is a blueprint for entrepreneurialism in general, even outside of franchising in South Africa, which is will be a major catalyst to economic growth and prosperity in the country.